Alrighty guys, just wanted to show you this setup that I've just noticed. I didn't cover in the previous weekly wrap-up video, just purely because of time. We didn't have enough time, but just noticed it now and I thought I'd just share it with you, just so if you're interested in, if you're willing to make a trade. So this is the pound Aussie, okay? I love trading the pound Aussie for two reasons. Firstly, it can generate some big profits in a short space of time. Okay, the pound Aussie usually moves quite a fair bit, right, in terms of pips, right? So the Aussie, say the Aussie USD might move on average, say 50 pips a day. Just putting a number out there. The pound Aussie usually trades almost double or triple, right? On average. So but there's also risk associated with that too. So if it goes up 150 pips, it can also go down 150 pips. So you just got to be mindful of that, right, in terms of position sizing. But I just noticed this setup here, and I'll show you what I'm talking about here. So I'm looking at a bearish move down, okay, and we've put in a new lower high, okay. So two things are going to happen here, right? Now, I'll try and. So two things are going to happen. So it's done a lower high. Now it's kind of moved back down into structure. Okay, previous structure, and we're kind of at that point where do we go up or do we go down? Okay. Now this is where you're going to be like, okay, well, I'm not going to. You're going to wait for the market to give you a signal. Okay. You can force a trade here to buy or sell. You can do that, but just be aware that you don't really know which direction it's going to go. You're just taking a guess at this point, right? So what I'm doing is I'd go into the lower time frame, okay? Nothing, what's it again? All right. And there we go. Try to find some more evidence of what the market is actually doing, okay? So you start with the higher time frame, like the IPD process that I went through in my previous video, and just find more evidence, right? And going down to the 4 hour, I've found a lot more evidence. I've found some potential patterns that are setting in. Okay. Now, and then when I went down to the 1 hour to get a better view of what the market's actually doing. So I can already see here that there's a bit of support here. There's a fair bit of support. So price has gone down, tested previous structure, gone back up, traded back down, but eventually it will go back down here and retest it, right? You can see these big wicks over here. So price has gone down. There's been some sort of buying pressure. Buying that's just pushed the market back up. So that's what I'm looking at there. So I know already there's a lot of support there, right? Now, is it likely that the price will break through that? Yeah, it is very likely. That's always a possibility, right? But this is where I kind of combine knowledge of correlation, right? Correlation is just basically the pound Aussie, but what's the best way to explain this? How is the Aussie price action on, say, the Aussie USD, for example? You know, is it trading the same direction as the pound Aussie, or is it trading inversely? Right? Now, I've noticed that the pound Aussie and the Aussie dollar usually literally trade opposite each other. Okay, so when one goes up, the other one goes down. Right? So that's where I've gone to the Aussie dollar, and I like to use this. This is really for analysis, really. But for instance, we know the Aussie dollar is weak. We know that it's going to keep going down, right? The pound is generally always stronger than the Aussie, right? And I've already got evidence of it going down. So I kind of use this as analysis as well. But I've also developed a strategy where I actually trade both of them, right? You're probably thinking, well, that's not really. It's not a hedging strategy. It's more like it's just another way to minimize risk through position sizing. Okay, so rather than taking, say, 2 lots that I would usually take with Aussie dollar, instead I can take one, right? And I'll take one with pound Aussie, for example. But that way I'm able to, have further stops, bigger stops, right? Just to minimize risk and avoid getting stopped out. Right? That's all it is, really. But anyways, I'll go back to pound Aussie, and I'll basically notice that we've got two bearish patterns that are terminating at these levels, right? That's not going to be for a while, right? So this is going to take a while before we actually see this get touched, right? So it could be during the week sometime. But then I noticed also, well, you know, through my analysis, I'm pretty confident we'll see price go back up there. So that raises another question, which is, are there opportunities on the this side of the market, bullish opportunities, where I can kind of take advantage of that and kind of ride the market back up, right? Now I can buy here and in the hope that it'll go back up there, but there's always the possibility that it won't go back there, right? It could just completely roll over and go back down. I could always be wrong, okay? So what I want to do is I want to look for evidence, right, of anything that can give me a bullish signal that will give me an opportunity to buy this and ride this up, right? Because we're talking about a pretty big move here, right? This could be a pretty profitable trade. So if we look at from there to here, we're looking at, you know, 3,000 pips, 3,800 pips. So this could be a really good trade if you play it properly, right? So what I've done is I've noticed that there is a bat pattern, right, on the 1 hour, right? So we've got a X, I'll draw it for you. I'll draw it again for you so you can see it. Without drawing the measurements because it takes a bit of time. So you've got X to A to B. Oh shit, hold on. I haven't used this one for a while. X to A, and B to C, C to D. Now I've just drawn that a little bit wrong. There we go. And there we go. So we've got a bat pattern that terminates at this level here. So if it goes down here, I can buy. Okay. Now this one's a really good one because you've got clear structure. You know the structures here. Okay. You know that this is the support level, right? So your stops would generally go below this structure level, right? So which is where I'll place my stop. So your risk there is this much. Your potential reward is this much, right? For initial reward is a 1 to 2.5 to target 1. All right. So I always calculate my risk to reward based on the first target, not the whole move. Okay, because your first target is always the most important one. So I've already got a potential buy signal. Right now, if I actually go down to the lower time frame, I actually get more evidence. Right, I can drill this down even further if I want to. I've got a potential cipher pattern on the 15-minute chart. So I've got two confirmed entries, right? I've got a cipher pattern on the 5 or 15 minute over here, or I can enter at the bat pattern level, which is over here, which I think I've drawn wrong anyway. So let me just go back there. I've just drawn it wrong. That's all. But most likely, I'll do it now just to show you. Now, if I go to right to swing. Actually, this might be an invalid pattern too. No, this is invalid. Sorry, it's invalid because this the C leg actually crosses above the X leg. It closes above it too, so that's invalid pattern. You know, these are the rules. You can still take it, but they're the rules, so we'll stick to the rules. Okay, so we can enter at the cipher here, right, with our stops being this much, and our initial target being at this level. Okay? Now, you can play this a few ways. It depends on what your strategy is really, but you can take profits here, right, and then leave half the position to trail to the rest, right? Or you can split these contracts up into, say, 3 lots, you know, 1 lot here, 1 lot there, 1 lot there. It's up to you, right? But the end game is I want to kind of see this. I'm hoping to touch this level here, and then have a trade and then basically sell it. So you're buying up here and selling it back down. Okay, pretty good one. Now I'll most likely take this bat pattern, right? Because when I first drew this, I've got the cipher pattern. I had the entry around here, right? But then I was like, well, I don't really want to enter there. I'd like to enter here. Right, because that's a good structure level to enter, right? I'd rather enter there and I'll get the better risk to reward, right? So this one here is the bat pattern, which is the blue, and this one here is the purple one. So you can see I've already half my risk, right? I had this much risk before, but now if I decide to take the bat pattern, I've got this much risk, right? And potential for higher reward, okay? So that's my strategy, that's my game plan, right? So this morning, when the market opens in the morning, I'll look for price to potentially go down these levels, buy it up, and hopefully, I don't know how long this might take, but then as soon as this target's hit, then I'll look to enter a short position and ride this one down, okay? Now, I think we're going to see some higher prices in pound Aussie. The Aussie dollar is going to be very weak, into the new year. So I might only take target ones for this one, and then look for evidence of a potential reversal back up. Now, like I said, if you can use Aussie dollar to trade these, right, in an effective way, right. So in the Aussie dollar perspective, I've got a bearish cipher pattern here, right? That's on the 1 hour. Now, same thing. I went down to the lower time frame, 15 minutes, to find evidence of what I can do next, right? Now, prices. If you look at these prices, kind of, I'm looking at a bit of a move down, right? And then a potential reversal at this level here, right? Just mainly because there's a trend line here, and I still think there's still Aussie dollar's not yet ready to fall. We will probably see one more move up, and then it'll roll over. Okay, so I'm going to look to short this one, right? I've already worked out where I might want to enter, right? And this is a structure-based trade, right? There's no advanced pattern here. But if you look at it here, I'm looking at just price, coming back down, pulling up to retest structure, and then I'll enter at that level and then ride it down basically. So you can see here, price has gone back down. I expect it to kind of maybe hit this level here, maybe just above, and then pull back up into previous support, but now is resistance, and look to short the market and take targets at either this level or this level here, right? Now, that's on the 15 minutes, so if I go to the 15-minute here, like I said, we're waiting for this to touch, and then it should reverse. So as pound Aussie rallies, Aussie dollar should fall, okay? This is like a really, really good tip if you guys don't know this one. So yeah, and as price goes down to retest this level and a potential reversal back up, right? I'm kind of looking too far into the future at this stage, right? So you shouldn't be looking too far into the future, but for me, that's just how it works for me, and I've been pretty good at it too. So, so as it reverses back up, which we hope it will, at some point around these levels here, I'd expect the pound Aussie to retrace, right? So if target one is hit, I'd probably take some profit, and then maybe buy again on the retrace. Okay, so as price does this, right, goes back up, hits target one, close half the position, leave the rest there, and as it pulls back, it might pull back in the previous structure, this level here, for the next move up, right? Now, I'll probably enter another position, right? I like to kind of trail my positions and add and increase my potential reward, so I might do that, okay? So yeah, so that's the pound Aussie and Aussie dollar. So hopefully this might help you guys a lot more, okay? Alright, I'll leave it at that, and if you have any questions, let me know. Cheers, guys.